Hi, everybody. This is Gary doing Sentiment Timing, and this is our technical video report for Wednesday, March 11th, 2020. So again, I'm really sorry about not getting the report out last night. Not in my wildest dreams did I think I was going to be in the emergency room from 1:30 in the afternoon until 10:30 at night for a simple X-ray of the ankle. But in any case, it did. And then with today's open, I just really didn't have any kind of feel for what was going on as far as with the trade part, and I didn't want to get anyone in trouble with this. If I just wasn't really all there as far as getting a feel for what was going on, yeah, I don't want to lead anybody down the wrong way. And this market's moving so fast that you make one little minor mistake, and either you're going to get in a trade and be stopped out in a matter of 2 or 3 minutes, or you hang on to something and you get slaughtered. It's very it's a very risky environment. So let's take a look at what's going on right now. This is a bigger picture. This is the monthly view. So we want to take a look at the monthly view, then go to the weekly, daily, and then we look for where the trade setups are. So this is the monthly chart. This is the trend line that's really been in place all the way back through 2009. Now, the important part about this chart that I see is when we came off these lows and we started getting above the 250 week and the 200 week month moving average. Once we got above it, notice that we never went below this. So we're talking about a move going all the way from 2011 for the last 9 years. We have not traded below this. Now, does it mean that it can't? No, not at all. But I think the first test on here, and if anybody's looking to get short at anywhere near this 2631, I meant the risk reward is just not on your side, because you have this trend line that's been in place. You have the 50-month moving average that's at the 2631, but that's the say the bullish case, or the case where not getting too bearish here, because you're asking for trouble, even if it's just a little short covering rally. But the short covering rallies that we saw yesterday run 130, 150 points. There's months we don't see those kinds of moves, but these things are happening on a daily basis. So, just adding a short position right here, I think is very, very dangerous. Now, notice we're just starting to roll over right now. So there's plenty of room, and that's why if we get some kind of bounce, and let's say they don't solve this repo crisis, which, again, I'm still sticking with this is the sole reason why we've dropped 20% in 2 weeks, and it's not the coronavirus, but I'm leaving that out of this update. But I don't think they're fixing it. So the thing is that there's more panic that could happen, and that's just the bigger picture part. And the reason why I'm saying that is we pretty much know what's coming down the pipe, and that's going to be Trump throwing the baby out with the bathwater, throwing everything out it to try to save this market, because he knows that when it goes down, it actually reduces his odds of getting reelected. And him, he's a fighter. He's going to do whatever he can. He's going to pressure the Fed to lower rates. But the thing is that we saw what happened. The Fed lowered rates, and we were down some 10% from there. So if they lower rates again and we keep going down, this is where people are going to start to understand that there's an underlying problem besides rates and stuff like that. And it really is. There's a very serious problem going on right now, where banks are not trusting each other, and it's freezing up this free money that a lot of these hedge funds and stuff are getting that were made to stuff the bots and bring us to where we are right now. But that's freezing up, and so what I'm saying, just to wrap this with this chart up, is that getting short in this area, taking new positions, is as dangerous can get, because you could see at a minimum a 200-300 point rally off of that. Now again, if it gets taken out, then we could see things slide a lot faster. But we're just going off of the risk reward and odds that have taken place all the way going back from 2011. It's not a high odds trade. It's there's some that are they're 99 to 1 odd horses that win the race. So maybe this is one of them. It's not really the type of say a wager I want to put on a trade or put a lot of money on it, because it's a 99, it's a long shot. So the odds of this breaking through this it's not high without a bounce first. So that's that chart. So let's go to the weekly chart here. So the weekly chart, we have 2671. Now we've went a little bit below that, but remember 2671, and then we have the 2631. So this is major support right here that has been in place for many years, and to assume that we're just going to break through it, like I said, to me, I think it's a dangerous trade and something I'm not looking to get involved with. Now, if we took it out and then we came up and used it as resistance, sure, I'd be all over that trade on the short side. But right here, we've dropped 20%. You can see the weekly, we've only burned off half of the, we're only at they only reduced this a halfway right here. We don't have any bearish divergences. So again, this is telling us that as much as we could get these big drops like we're getting, this was a bearish divergence here, and we saw a massive drop. But when we made this top, we came down and then came back up again, and we made the bearish divergence. Now again, I'm not saying everything has to run the exact same, but we don't have any bearish divergences, so I don't know if I'd be calling a long-term top on it, but neither do I really care. That's, neither here or there. What I'm showing you on this chart is we have 2671, that's support, and every time we've gotten there, we found buyers. So you have 2671, 2631 are your support levels. So this is really what I would be looking at as a buy zone. If you're looking for, say, a kind of a trade that's going to last more than a day or two, it would be in this area here, anywhere from that 2663, and if it went down to this is even another one on it. So we have 2670, I forget what it was, so hang on a second. We have 2670, 2631. Those are the two big support levels, but notice we also have a 78% retracement from this low to this high. That's at the 2574. So you have three different support levels here that very well could hold. We're very oversold right now. So, what I'm saying, I'm not giving a all clear to buy, but what I'm really saying is just be very careful shorting down here, because as I showed you, there's three different layers of support. We're very oversold on the daily charts. We don't have any bullish divergences, but even though, like, from these levels, if this holds, I'm waiting for that bounce that's going to take us someplace back up into the 3,000 level, where we test I'm not sure if this is the 200-day moving average. So test a 200-day moving average on the daily, that's at the 3067 level. So if we're down if we get down to this 2670 and it makes a run up to 3060, you can see, that's what I'm saying. It could be a fantastic trade on the upside, but we still could be in a downtrend, because I wouldn't be surprised to see us do a little bit more of a retracement, maybe down to the 38% retracement. So that brings us down to 2350. So as much as I'm expecting a nice bounce that I believe we could trade off of, I'm also believing that we still could head lower, but that's a little bit down the ways. But this is your buy zone. So let's say we get the bounce. Now what we want to do is start looking at where the short zones are, and that would be anywhere from this the 3040 up to the anywhere, say, to 31.50. So if we get a bounce and we get up here, this is where you're going to be looking to short, and this would be more on a swing trade end of things. But my point is this: is here I want to be very, very careful if you're jumping with new short positions. So 60-minute chart, this is telling me that we may be closer to a bottom or at least a nice bounce, because here you can see we have the bullish divergences right here. This was support, so now this is now resistance, and we have to see the bulls get over to 28.84. But again, even 28.84 is 140 points from where we are right now. If they get through it, then I believe we're coming up to the 29.71 and then possibly up to the 30.50. But right now, this is the important resistance area. It's the 28.60 up to the 28, say 2900. And if the bulls get above it, then we could, obviously there's some other resistance levels. But you can see we have the bullish divergences, very overbought. We are at some support. Me personally would rather see the 26.70, and if we get there, I may be interested in, in doing something like that. But so we have bullish divergences, so that's a warning sign. And then if we look at the 15-minute chart, we also have bullish divergences here. So I would, if you're short the market still, I'd put some stops in place, at least short term, and then see if we might be able to re-grab shorts somewhere up into this level, because we've had some bounces, but we're getting to that stage where we could get a bounce that's even bigger. But I want to make sure the bulls are in place before it. But we have bullish divergences on the 15-minute chart as well. So if the bulls can get it above the 27.80 from there, I'm anticipating that they're going to come up and possibly close the gap here at the 28.50, but more likely come up and test the 2900 again. So I'm going to keep an eye on things. I may have to be running to the hospital, not the hospital, but an orthopedic surgeon tomorrow for Margaret. I'll let you guys know what's going on with that. But in any case, let's see what plays out tomorrow. Have a great night. Be careful with new shorts, and let's see what plays out tomorrow.